Sunday the 14th of June, looking at DXY, EU, gold, and we'll touch on GU as well briefly. Starting on the DXY, got our most recent swing points, indicating that we're remaining bullish, so no change really from the previous week, and the same from Friday's live. We're looking at where we're at with price action at the moment. Obviously, we've already come into the discount. We've swept internal range liquidity right here. We mark that out like so. And now the question is basically, are we going to come lower into this extreme level of demand? So we've got this 4-hourly demand. There's a question mark around that because, like I said, we've already taken internal range liquidity and we're kind of holding this level, which kind of aligns with the 50% retracement. So closed relatively bullish on the week. Well, the last 4-hourly candle that is anyway. We've got to think about what's happening geopolitically as well. So obviously over the weekend, I think there was meant to be, well, today there was meant to be the signing of the ceasefire agreement between the US and Iran. I haven't seen any news on that happening yet. I kind of called bullshit in the chat that I was in the other day. Basically, my prediction is that it's not going to get signed, and the dollar is going to open up and basically gap to the upside. Obviously, because if it doesn't get signed, that's seen as negative on the US economy. Sorry, negative on all economies basically, but seen as a risk on move. So the dollar will then basically rally, seeing as it's a safe haven. So if it doesn't get signed, we'll probably see the dollar continue to push, and that currently aligns with what the technical side is giving us. So that is, move number one, basically. Move number two is going to be that it does get signed, which means the safe haven option starts getting sold off, and potentially we come into this area of demand and wait for some more Trump bullshit. We'll see. But that's probably what's going to determine where price goes on the front end of next week. Is whether or not this kind of agreement gets signed by the end of today. If it does, great. And we'll probably see the dollar come down slightly. If it doesn't, then I imagine price is going to just start rallying on the dollar again. That's probably going to tell us that tensions are starting to rise again. And essentially risk on assets are basically going to start to rally and vice versa. So that's what we're looking like on the dollar. Obviously, conscious that we are already reacting inside of this inefficiency right here. So again, we are in a discount in a POI, moving bullish. So things are aligning for price to continue rallying, but just bear in mind some of the other macro factors. So if we switch to EURUSD, again, blank chart just to kind of start from scratch on this one new week. It's it's the same story on DXY basically, just reverse. Nothing really changes too much. We do have SMT at the lows, basically telling us that euro has divergence with the DXY, where DXY took out the high. However, euro hasn't. So that's basically telling us that euro is wanting to push higher, and that could potentially come from the news that we got. Well, it did come from the news that we got on Thursday, which was I think this was the things were going to move positive with Iran, and then we had the confirmation of an agreement over yesterday, I think it was, or on Friday. I think that slipped out in the news. So we could definitely see this then push up if that happens. Like I said, if it happens, if it doesn't, then obviously it's going to want to drop. But just keeping in mind that we've got equal highs here. We have a key draw, and this is also a previous week high. So this is a really strong draw on liquidity, basically. So what we can start looking at for a narrative is to see this get run on, and then potentially see a break to the downside. Or if things go really, really well, then we can see price basically start flushing through, I imagine, and start targeting the liquidity to the left, seeing that we've built up orders here through this accumulation. We sought the lows first in this inefficient piece of price action, which means that we could then see a run on these highs, basically following the AMD model, essentially. But this is going to be our kind of current mid-structure point of interest. And if that doesn't get respected, then obviously that's what we're going to be looking to these highs next. So that is That's where I'm looking on euro. And like I said, it's going to be dependent on whether or not we hear about this, so-called ceasefire agreement getting signed, or not. Um, I mean, I'm not going to take a trade based on that, but it's going to give me an indication of where price is likely to go, at least in the short term. Um, if that makes sense to people. So I do like where we're at in price in terms of what things could look like. Obviously, we've got an hourly kind of AMD starting already, and this kind of built up from the close of Friday. When we think about when we've had a push to the upside and accumulation, failure to push lower and higher, you got to understand that we're generating orders here. So when we're generating orders to the upside, obviously I've already marked that previous week high liquidity. It also means that we've got liquidity to the recent lows down here as well. So when price wants to accumulate, it means there's a lack of volume and a lack of kind of velocity in the market, essentially. When we push up above this high, it doesn't necessarily mean this is the new trend. It just means that price was seeking an area of liquidity to facilitate the collection and input of orders, essentially. Now that might mean that it triggers more orders to then go higher, or it could mean that orders have now been have been processed to then go lower, and that's where the AMD model basically comes in, and it takes an element of multiple different things, but that's basically the gist of it. So I'm going to be looking at these two options mainly, and like I said, it's going to be based on the macro perspective. So keeping an eye on it. Overall, looks really nice. Got our points of interest already marked out, so we're going to be looking at those over the week. Um, and we'll just look at GU quickly just to see how things are differing. We've got SMT there. Really. So obviously you've got SMT with DXY, the same with GU and EU. I tend not to correlate GU and DXY or negatively correlate those two, just because the GU isn't massively weighted to the dollar in the same way the euro is. But obviously it still moves relatively the same-ish, just not as much as the EU. One thing to be conscious of GU is that I believe we have SMT at these lows actually. Yeah. So we have obviously a higher time frame SMT of GU here, where we're basically just accumulating between these 2 points. So we're accumulating between this low and this high. So this has essentially been noise, hence why I haven't wanted to trade it for the last few weeks. And that basically means we're going to have two key draws. That's going to be this high here and this low here on a higher time frame perspective. Everything in between is going to be relatively hard to read on GU. You can look at the hourly swings, but when it comes to looking at higher time frame swing points, ultimately all the price action is stuck between these 2 points. So you want to kind of be conscious of that when we're thinking of weekly narrative, for example, or weekly profile, because essentially it looks like that, and you can't really go off much with that. So just bearing that in mind. So 4 hourly again, obviously recent structure. If we just go off that, most recent break was here, so currently bearish. POI wise, haven't really got much. I think we've already come into this order block, so we've already tapped that in here. Swept internal range liquidity. What makes this a potentially weak internal range liquidity sweep is that this low didn't break this this low here, so we didn't make a new low before coming back up, which means there's a likelihood that price will continue to rally essentially. So if we do see price come up, obviously we've got these highs marked up here, which is the top of our accumulation, which we could see price basically run to if this gets disrespected. Got relative equal highs on GU as well, so just being conscious of that. But ultimately, with the current 4 hour swing, we're looking at a bearish narrative. And again, same with GU and E, you've got this accumulation basically building up. So I think there's going to be it's going to be key on Monday open or Sunday open in the UK. what price is going to do. I'll send an update in the chat when we get. I think there will be a gap. It will just be whether it's to the downside or the upside, depending on whether or not something gets signed. But I think that's ultimately going to determine where we look for the week ahead, essentially. Any questions on EU and GU, George? Yeah, word. Word. Gold is in an interesting spot relative to its actual asset class. Gold has kind of for the last however long just gone up and up and up and up. However, this year basically started the first 6 months in a bear trend. So I'm not going to try and fight that whatsoever. Essentially, we're still looking to continue going short. We're in the discount right now of the 4 hourly swing, and the hourly swing, so it's quite nice. I'm going to be wanting to see gold basically come up more before I look to enter anything. I've got this on my other chart. Basically, this is my area that I want to see price come into. I do see price basically accumulating up a little bit more. But we've already started to accumulate as well, so we have already generated some orders above these highs, and that would give us the nice accumulation model. Sorry, AMD model. Mark that out. Doesn't want to do it. Brilliant. So basically, we want to see a run on these highs, some sort of confirmation, and then wait to see price roll over if it wants to do that. I'm not going to fight and then kind of just assume gold's going to start rallying when all it's telling us is that it wants to sell off. So don't speculate on a market when there's no real reason for the market to do that necessarily. Obviously, the only reason we want to see gold, or we could see gold basically rally, is that it's traditionally seen as a commodity and as a safe haven. But quite oppositely recently, the dollar has been rallying and things have been getting worse, but the gold has continued to go down, which is a little bit against what gold has done for the last, decade or more, basically. So, going to be basically just continuing to trade this more technically than anything else. I think it's more so just quite clear on the technical front anyway at the moment. Definitely using the hourly points as my safe stop loss zones. And the reason for that is just gold has been wicking very hard on the 5 and 15. You can see when it accumulates, it's accumulating pretty hard. And so I'm wanting to keep my stops relatively safe, basically. Haven't taken a trade on gold in a while, but I think this week could be a good week for it. Again, we're in a very interesting spot. So, like I said, just waiting to see gold come up, give me confirmation to then go lower. You looking long or short, Jordan, on gold? Either one is fine, obviously. I think it'll be a good week trading this week, can't lie. Bearish, waiting to tap into that. Yeah. Word. Word. Yeah, it should be a nice week. I mean, I think Monday, Tuesday could be used as confirmation days. It makes a lot of sense to wait, basically. There's nothing, unless you're swinging and you want to just get in on a really random short on Monday's open of your stops above these highs, but that's just a bit crazy, like I said. So Monday, Tuesday open, sweep into this high, lower time frame confirmation. I think you're good as gold. Take that trade every day of the week. Quick scan on AU. Same as gold, basically. Yeah, and sitting is right. AU is basically the same as gold. We're just continuing to sell off, and I'm not going to go against the kind of the technicals here. come into a discount. We're actually already in a pretty prime spot. We've already swept this into on a range liquidity with the first tap into the POI, and now I'm basically just going to be waiting for a little bit more confirmation on the, well, I'd say the hourly. I think the 15-minute would do here just on how tight price is. But I'll be waiting for the 15-minute to basically give me some confirmation, and that's going to look like basically taking that low out there, because this would be the last strong low. So after that gets taken on the 15, obviously there'll be an hourly low as well. That's going to be my confirmation for AU shorts to then go active. And apart from that, I think AUs are pretty much a given. Really, there's not much else to really talk about on there. Obviously, just being conscious of these points of interest up here, but there's always going to be liquidity, you know, above and below stop losses. It's just about where the high probability and the low probability draws are. So currently following the trend here. Big push up, but like I said, on the other pairs, it's going to be very dependent on whether this ceasefire agreement gets signed or not. It might have already happened. I just haven't even checked yet. So you know, we can just look on Forex Factory quickly. I mean, that's not really related, so we'll see. We'll see if anything comes out. And like George said, hand sitting on the start of the week, wait for confirmation, and then fucking full port. I'm joking, don't full port. We will be waiting for high quality positions only. Hopefully that made sense. If you've got questions, let me know. Send me a DM if you need help with anything or if you need something broken down more. Is there anything else you wanted to look at, George, before I sign off? Will be full porting. Good man. Rate that. All right. Sound, guys, and have a good week.